There's a circle of influence going around about having financial security and peace of mind, but what does that really mean and how can you attain it? You know, in the realm of financial planning, whole life insurance often sparks a whole range of opinions, good, bad, and ugly.
It sure does. You're listening to Wealth Talks with the McPhees. We're sitting here in the studio, and whole life insurance, it does spark quite a range of opinions depending on who you're listening to. Some financial gurus like it, some of them hate it. But the fact is, it is a great tool for creating lifelong protection and security, as well as providing a solid foundation for building a secure financial future as well.
It seems like much of our life has sparked, or the aspects of our life that we choose has sparked a range of opinions. So, for example, we're Christians, and that strikes some people great, and other people are upset about that.
You're Christian. Are you Baptist, Catholic,
are you
Lutheran? What are you?
And then, of course, Tom, you were a chiropractor for over 20 years, and you only came into the life insurance industry because you fell in love with whole life insurance and had to share the message of it with people, so you know what side, what opinion we have of whole life insurance. But chiropractic, many people don't understand it. Some people love it.
And some people wanted to know why I didn't become a real doctor.
Yeah, and some people are very against it, and some people, they don't really know. They don't really care. And then we home educate our children. Oh, some people thought that was great, and other people thought, what are we going to do about, them being social? Or why aren't they studying even at 6 o'clock at night? So just these all different range of opinions, and yet we need to be convinced in our own minds of what is valuable. And if we can express that to people so that they can have an understanding, that's great. So we're going to be exploring these different opinions so we can talk about them. And if you can find out why we love whole life insurance, great.
And like we used to say when we would host our bigger events, we would get up and would say, okay, we're followers of Jesus Christ. We believe he's the Son of God. And we believe that what is written in the Bible is God's direction for us, for this earth to go and move and progress at the best and most efficient way. Whether you believe that or not, it doesn't matter to us. We just want to express to you the freedom and the joy and the success that following those guidelines to the best of our abilities has produced for us.
And that's why we wrote a biblical guide to personal finance. It's just been published this year. And you can get that by going to
wealthtalks.com. So go to wealthtalks.com. You can pick up your copy of a biblical guide to personal finance, or you can call us at 702-660-7000, and we'll get you connected with your copy of this book.
Because it doesn't matter really what your belief is. The principles that we have, these biblical principles are true, and they will apply to your finances. Just like you don't have to believe in a creator to enjoy the sunshine. I mean, it is there, and your creator gives sight to your eyes, whether you believe there's a creator or don't believe.
The rain falls on the just and the unjust alike.
That's right. That's what the Bible says.
Yeah. So in a pragmatic way, like Dave Ramsey approaches finances, we're going to approach whole life insurance in a pragmatic way today. First of all,
pragmatic, what does that mean?
It means down to earth, no fluff, just straightforward.
Practical.
We're just no fluff about it. We're just going to list them, okay? Lifetime protection and security. There's no doubt that whole life insurance is the only one that gives a guaranteed lifetime protection and security because it has guarantees. Guarantees that say if you pay this premium, this is your death benefit at this specific time. If you pay the premium exactly like this, your cash values will be exactly this number on this date. You can point it out in the contract, and that's the only contract in life insurance that provides that.
Great.
Second, there's cash value accumulation in a whole life policy. This accumulation really is not accumulated. It's a representation of the equity you have in the life insurance you're buying. So just like you buy a house, and every payment you make, you own a little bit more of your house. Mm-hmm. You buy a whole life insurance, every payment you make, you own a little bit more of the death benefit. And that death benefit, if you own it and then decide to surrender your policy, guess what? The life insurance has to refund you the part you've paid for. Just like if you sold your house and get your equity out of it. So this is often misunderstood, miscommunicated by a lot of people, but that's a fact. It develops cash value.
It does. Yeah. And some people will say, well, it could develop cash value faster, maybe, or you could maybe earn more money by going out and investing in the market. But, you could also potentially earn more money if you hit the jackpot.
Yeah. Oh, that's a good
in Las
strategy.
Vegas. Yeah. No, I mean, if you knew you would hit the jackpot every year, then, maybe you could build something on that, some sort of investment. But no, that, the life insurance cash value, that's going to be there
It's
every year.
guaranteed.
Yeah. And so maybe it's not going to be as much as potentially investing in the market, but you might not have to wait 5 years when the market crashes either to get access to the entire principal again.
And I have a great uncle that was hit by lightning twice and lived to talk about it, but that's not the rule. That's the exception.
There you go.
So the third thing is there are guarantees. We just mentioned those, and that gives us predictability. That means that, in 5 years, I know exactly what this contract's going to be. It could be better than that because if it's a participating policy, it could be sharing in the profits of the company as well. But the guarantee is you pay your premiums like you said you would, and this is guaranteed that the company will do it. Even if that company is sold to a different company, that guarantee will be there and honored by the new company that takes over the policy. And by the way, that's happened to some of my life insurance policies. They have been purchased by other companies long before I ever knew about this. I bought a whole life policy, a term policy, when, my goodness, must have been 25, long before I had met you, Michelle. And that policy was sold to 3 different companies before finally we realized, we're going to replace this.
And so did you say that was a term or whole life policy?
It was actually
It was a term policy
Okay.
that developed cash value. Very few companies do that anymore.
Okay.
It was a policy
So
that
kind of a hybrid.
Yeah, by the time I turned 59, all the premiums I'd paid for the policy would be back in the cash value. I could have surrendered at that time and got my money back without any interest or growth on it, of course. Or I could kept the policy and then they would have minused or subtracted from my cash value to pay the increasing cost of term.
Okay.
By the time I was 72, I'd have been out of insurance.
So whole life does obviously better than that because you
Much
wouldn't
better.
just get back your premiums after that much time, but you would have some extra cash value growth to
It's
show for
interesting
that,
that
too.
we're talking about this because I did have one of our clients recently ask me about this kind of insurance because they had bought a term policy from us and they said, wait a minute, can I get this kind of policy? And we talked about it and why it's just better for her to continue her plan of paying her term insurance and also starting to save so that she can afford a whole life insurance policy.
Because it's more expensive for that type of insurance if you're going to recover the premium out of it.
Yes.
Yes.
And it's just better to do the whole life.
Yeah. Okay.
The fourth thing about whole life insurance is that it is an estate planning tool, and it is the way that most people, almost 70% of Americans, it's the only way they can really plan to leave an estate or a legacy. And that's just a matter of fact. So if you like guarantees, if you like predictability, if you like the fact that you can plan around your estate and leave a legacy, then guess what? Whole life is something that should be part of your financial plan.
Yeah. And obviously, financial decisions should come from a balanced approach. You want to look at the facts. Look at the situation, look at what you're trying to accomplish with your goals. Get information from people that know what they're talking about. We talked about choosing experts wisely last time. And make sure that this isn't just a deconstructed plan, like the deconstructed strawberry shortcake we talked about last week. You want to make sure that this is a product, that's going to fit your needs and goals. And then when you're approaching the decision from that aspect, you're able to make an informed choice about what's going to be best for your needs.
Here's the bottom line. Michelle, how many times has someone called our office and said, I really just want to get rid of my life insurance now that I'm 70 years old. I don't need it. Have you ever heard that?
No, I have not.
Never. It's always, I wish I would have bought more of this. In fact, as I tell people, I wish I'd have known about this 20 years ago. I hear that statement so many times. My goodness, we could have bought several life insurance policies with the money if we just got $5 a time every time we heard that statement.
Now, I will say that sometimes I have a client call in and maybe they've forgotten why they purchased the whole life insurance and they've forgotten the values of it and how it can serve them. And so sometimes they'll say, do I really need to keep this life insurance? sometimes that does happen.
Sure.
And so then we'll talk about, what they've paid, what the policy is worth, how they can access the money. And pretty soon they say, oh, that's right. No, everything's good. And then occasionally, someone might call and maybe their financial situation has changed and maybe we need to make some adjustments with what they have with their life insurance. But no, they see the value of it and realize, wow, people can borrow from the cash value in their life insurance, and we're able to design whole life insurance policies so you have a lot of cash value right away, and they're able to borrow that at 4 and 5% when right now people are seeing 7, 9%, and even higher right now in the
For mortgages,
the economic
cars,
environment
yeah.
we're in. Exactly. And so they realize, wow, this is a great resource I have besides even being the life insurance.
And I'm just thinking of the people that we didn't sell life insurance to, but now have become clients, or we've talked to them just in passing because we're in the life insurance industry. And they always tell us, this was absolutely the best investment I ever made.
Oh, we're a life insurance agent, so we're not supposed to call it an investment, but these people do because they see it's played out better than any
it performed
investment they made.
regardless. When everyone's 401k was turning into a 201k, and back in the early 2000s, I remember Nelson Nash talking about that. When people lose 30% of the market, like they did earlier this year, the life insurance keeps performing because it was guaranteed. And I was just writing an article today how the big 3 banks in the United States, J.P. Morgan Chase, Wells Fargo, and Bank of America, they're just still paying their depositors like 0.1%, while they're raking in billions of dollars because of the interest rates that have been raised by the Federal Reserve. They're not passing those benefits on to their depositors, whereas in a participating in life insurance, those interest rates, profits, would have been passed on to the participating policyholders.
Yeah. I was talking to a guy who's been a real estate investor for a good part of his life, and his parents were real estate investors before he was, and he was telling me the other day that, real estate, you can get like a 6% return based on the appreciation over time, but you have to be able to hold on in the times when the market's down. And, you can earn about 6% on the cash flow, maybe if you're renting the property out, but that cash flow tends to go a lot to the expenses that you're going to have over time, the maintenance, the taxes and all of that. He said, so you're really making money on the appreciation, but you have to be able to hold on long enough. And that's the beauty here with life insurance in like any other type of investing, really. But even in real estate, just like in the stock market, you got to be able to hold on during the times when the market is down, when you can't sell and get that appreciation rate, if you're going to stand a chance to get that 6% that this guy's talking about. In life insurance, you don't have to hold on for that long. Yes, there's a startup, just kind of like starting up a new business, but then what's going to be there every single year. You don't have to guess about it.
And that real estate investment can be done commercially, it can be done in rental, or it can be done in your own home. I remember when interest rates were very low, we took a home equity line from our home. We bought life insurance with it. We knew we were going to stay there long enough, and the market did bounce back up. It came back up. We were able to sell. Hey, that was a great investment. Okay. Nelson Nash talks about this with the land that he was buying. That's why he wrote the book, Becoming Your Own Banker. The interest rates climbed so high that he didn't think he was going to be able to make his payments. And so at that time, he was able to borrow from his insurance that he had bought 25 years earlier from his brother. And guess what? All he had to pay is the interest on those policy loans. So he was able to get rid of the snakes and dragons that were charging him 21, 23% interest, and then just slowly pay that back. And when the land sold, he made a killing. It's all what we do and how we control the situation. That's what whole life insurance can do for us. Not guaranteed in universal products, because that can bounce all over the place with market volatility. As we know, we've seen people lose hundreds of thousands of dollars. The biggest one I ever saw was almost $4 million that someone lost in a life insurance policy. Wow. because he was told this was going to grow according to the S&P 500. Just don't worry about it. You'll never have to pay any more premiums after such a point. That disappearing premium is a lie.
But that timing is such a big factor because, somebody that can hold on to the real estate, okay, cool. Maybe they can earn 6% over a long period of time. But what about somebody that can't, that needs to sell, to move, to get a different job somewhere, or needs to sell to be able to support their retirement?
Or even
you don't get to pick the timing of what's happening in the market.
Let's look at what happened in 2020 too, when suddenly renters were not required to pay their rent.
Yeah.
And so if those real estate investors who owned those properties couldn't float that, then they had some difficulty, faced financial difficulty. Many lost properties.
Yeah, and what's happening, even in the Las Vegas area, I was reading about this the other day, there's a lot of evictions that are happening because people got used not to paying their rent in 2020, and so now they've got to start paying it again. They're not used to having that in their budget. Rents have gone up as landlords try to recover some of the costs that they had to eat. In 2020, they have to raise the rents, as inflation and everything else is going up. And so now not only is it putting the landlords in a tough position having to find new tenants, but also the people that are getting kicked out. It's an extra hardship on them.
In 2008 and 2009, we saw a lot of people, and you probably did too, those that are listening, lose their homes because of adjustable rate mortgages. Mm-hmm. And what if those people, though, would have had money in their life insurance policies to help them through those thin years? They wouldn't have lost their homes. And so this comes back to where do we put our money? Do we try to rush to pay off the mortgage? What mortgage are they going to close on first? The mortgage that's almost there or the mortgage that just started? Yeah, they're going to close on the one that's almost there because they've got all their money out of it. And so you could end up losing everything you've put there, whereas if you divide your income up, like the scripture tells us, cast your bread on the water, it will return to you 8 and 9 times, okay? You got to be wise to do this, and whole life insurance gives us an option to be able to cast our bread on the water more efficiently and more predictably.
So that's one of the principles that comes from the Bible about managing finances wisely. You can learn a lot more of those by getting the book, A Biblical Guide to Personal Finance. You can get that book on wealthtalks.com or give us a call at 702-660-7000. You're listening to Wealth Talks with the McPhees. Have a wonderful week.